So you want to learn how to trade event contracts on Interactiv Brokers. Let's dive into it. So here I have a Interactiv Brokers account funded with as little as $5 in it, but technically speaking, I have $425 cash, which we're going to utilize here in just a second. I'm going to show you guys how this all works and how easy it really is. So when you get onto your dashboard, you'll see a page that looks like this. You'll fund the account with as much money as you would like, or really as little money as you would like, because you don't really need that much money to start trading event contracts, which is pretty cool if you ask me. It's like a way to get into betting in the markets, right? It's because it's kind of what it is. Now, your strategy behind it is kind of what makes it either gambling or, some sort of strategy or some sort of actual edge. But you'll come to a page that looks like this, and you'll go to where it says trade. Now, first things first, you'll have to go to where it says trading permissions. Click on trading permissions to make sure that you have permissions to trade event contracts. Under permissions, here's where you can request different types of trading features or different types of trading vehicles that you would like to be able to trade on Interactiv Brokers. So you have to go down to here to where it says forecast and event contracts and request the permissions there. When I requested them, I got approved within less than a day. So it should not take very long, but then you'll go back to your portfolio or back to the trade tab, I should say, and then go to IBKR Forecast Trader. That's now where we can trade event contracts. This is going to open up kind of a different portal. So now you're going to be, really thrown into this massive sea of millions of things that you can bet on or that you could choose or select in the markets. Now, of course, this absolutely takes on risk, just like anything else when you're trading stocks, trading options, or anything. And this is much more binary. So the cool thing about it, I think at least, is that you could look at something and you're pretty much just saying yes or no. You could, take a bet and say this is going to happen or it's not going to happen. And if you are correct on your bet, you will get paid out accordingly based on the odds of that scenario happening, based on how the market's trading it. So if a lot of people are betting yes, yes, yes on something, well, then the probability of yes is going to increase. And so the amount you'll get paid out if it was to win or if it was to be correct is going to be lower. So you'll have a popular tab here. You'll have elections, tons of options there, economic indicators, environmental options, which is super, super interesting. So this goes so much further than just the stock market. There are event contracts on climate, temperatures, which is pretty cool. Governments, financial markets, you'll see down here, but you'll see more of that if you go into event contracts by CME. Here's where you can look at, different things like gold, S&P futures or the NASDAQ and where things will close on a given day. So today is the 13th of May when I'm filming the video. So for example, I can go into here and say, will the S&P 500 E-mini close above 5750 on this day? Go into this and I can choose yes or no. But not only that, I can scroll on the left-hand side underneath the date that I'm selecting. So today's May 13th, and I can scroll to different price points. So if I was to say, okay, I think we might close even higher than where we're trading right now, which right now we're trading at 58.69. If I think we're going to close higher, then I can go in here and select something that has a lower probability of yes, and I can get paid out more. So how does it all happen? How does it all get paid out? Well, if I was to go inside of something that I want to take a bet on, I'm going to go back to Forecast Contracts by Forecast EX LLC. I'm then going to go into Popular. I'm going to find this one, the US Fed Funds Target Rate. And I'm going to click on this. So currently the Fed funds target rate is 4.375. And we can see the graph of this over time. This actually dates back to 1993's actually back in here, which is kind of, or 1994 back in here. So it shows you like how the Fed funds rate has moved over time, which is kind of cool. And I can go in, I can select a target rate. So I'm looking at June 30th, 2025 here. And I actually already have a position on one of these. So I'm going to actually add that position. So I am inside of here, and if I go to my activity, it will show me underneath here my position. And essentially what I have done is I've placed a bet that the or the Fed funds target rate will be above 3.875 at the FOMC meeting ending July 30th, 2025. So if I click on that, so that's this with this little dot right here that represents my position. And I click on that, I can now see the odds of yes or no. So essentially what this means is that I do not believe the Fed is going to cut rates to that level, which is indicated by this little blue line across our screen right here at the bottom. I believe that rates will be higher than that level by July 30th, 2025. Okay. So if I say they will be higher than that, the Fed funds target rate, I click on yes. The bid is 74 and the ask is 75. So what I'm going to do is I'm going to go in with a limit order, and I'm going to go with, let's go with 2. Just for the sake of the video, and you'll see, or maybe even 3 for the sake of the video, so you can see how this looks. So I go on and I select 3. I go to my limit price. If I want to get in right now, I can set my limit to 0.75, which is what I'm going to do. So I get filled right now immediately. And now 3 contracts at 0.75 or 75 cents per contract will cost me $2.25. I can actually bump that up to 5 contracts or 4 contracts because I already have 1. Let's just round it out to 5 evenly. So 4 contracts at 75 cents a contract gives me $3 for this position. I can set my time in force to day, immediate or cancel, and then good till canceled. So it's just like how in the stock market, you can set limit orders and then set the time in force if you want to let something just sit for a while. And if it comes down to your price, you get filled. Cool. It's the same exact thing. If the probability drops, you'll get filled if you set your limit price lower than where we're currently at. I want to get filled right now, so that's what I'm going to go ahead and do. Now, if I click on preview, it'll then give me kind of a last second preview of all this information. I will then click on transmit buy order. And now our order has been submitted. I can close the window, done. And if I was to scroll down, I now have under my position, I have 5. See how it says 5 now? So what does this mean? These event contracts close at $1 or $0. So if you are correct and the contract or your bet is correct, then you'll get paid $1 for every contract that you currently have, okay? So in this situation, I have to pay 75 cents per contract. And if I am correct and the Fed funds rate is above the level that I have set of 3.875 by the date, so by the end of July 30th, if that is the case, I'm going to get $5 in return because that'll be 5 contracts settled at $1 per contract. I then have $5 of cash the next day once it's settled. If I am wrong, I have 0. So it's a binary game. Either you're right and the contracts return you $1 per contract, or you're wrong and the contracts return you $0 per contract, and that's how it goes. So in this situation, when you have better than a 50% chance, okay, meaning that you're paying more than 50 cents per contract, you are playing or you are betting on the higher probability outcome. And if you're betting on something that is less than 50%, you are betting on the lower probability outcome. It can be quite confusing initially, but really it's super simple. It's either 1 or it's 0 by the expiration, and that's it. Now, there are ways you can play different games, and I'm sure there's a million different strategies that you can try to deploy to hedge yourself this way, that way, for tons of different things. But in a nutshell, from a simplistic standpoint, that is how it works. So you can see down here, I paid $3.75 and I would get back $5. So I would make $1.25 on my 5 contracts if the Fed funds rate is above the level of 3.875 by the end of July 30th, 2025. If you are looking to sign up with Interactiv Brokers, I will leave a link below this video to sign up with Interactiv Brokers, not only for event contracts, but they allow you to trade so many different things, and they are one of the best brokers I have ever had to deal with when it comes to support, executions, and then their ability to be utilized on something like TradingView, so you can trade a lot of TradingView charts or trade your Interactiv Brokers account through TradingView if you trade stocks or futures or something along those lines. Let me know if you have any questions in the comment section down below. Happy to answer them. And I'll see you guys in the next one. Peace.